Over the course of the last few years, a lot of people in the financial services sector, particularly outside of New York City, have lost their job. Here in Southern California, where we are, Orange County was a central area for the subprime lending business. Nearly everyone who was involved in subprime lending is no longer in the subprime lending business right now. And that has hurt the office market substantially. Over the long run, we will not see a return to financial services having their share of the job base that they did a few years ago, because the market share of financial services went to unsustainably high levels. And what that means is the long-term outlook for office, while not as poor in my view as it is for retail, is still seriously problematic. And that's why from a long-term standpoint, apartments look like the most attractive of those three investment types. Final thing I should say is the industrial market, while it's still going to probably bump along with problems for the next year or so, is very promising in the long run. Because as we shift out of consumption as the fundamental driving the economic growth in the United States, we're going to have to find sources of GDP elsewhere. And a natural place to do that is investment and exports. And that means that the industrial market will be more important going forward rather than less. So I'm actually bullish about industrial real estate over the long term.